Hey, what's up, everybody? It's Friday. Yeah. Friday, September 16th. All right, so the numbers are in, folks. The numbers are in, and I'm going to give them to you. So yesterday, we had like a 72 billion drain from, corporate taxes were due yesterday. That was the deadline, 72 billion. So far in September, out of 10 business days, 10 statement days, 5 of those days were negative. They were net drains for a total, get this, of 116 billion. The deficit, and remember, you guys all know now what the deficit is. That is, that's filling up the swimming pool. The deficit of the government equates to the addition to the financial balances of the economy. The deficit has gone from 88 billion to a 17 billion surplus in 5 days. I mean, if you consider these numbers, you have to realize that an enormous amount of cash was sucked out of the economy in a very short period of time. So as far as I'm concerned, there is absolutely no surprise as to why the market is struggling. I have to say, just on a side note, today was pretty good. I mean, we were down big and the market tried to make a comeback by the end of the day. And if we were positive on the close, which we were not, but I mean, it recovered a good portion of how much it was down. But if we were positive, I would have felt pretty confident in saying the worst is over. So 116 billion drain this month. I mean, boom! That's big time. When people talk about the Fed doing this, doing that, I mean, the Fed doesn't do these kind of things. I mean, all the Fed does are asset swaps, changing one form of a dollar for another. This is real sucking out that money. This is draining the swimming pool, below the freaking floor of the swimming pool. I don't know what other analogies or metaphors I could use to make it more clear in your heads. Now, and going all the way back to June, I warned about September. I kept telling you guys it's going to be good all the way through August, and then, we got to that August Jerome Powell thing, and, I'm going to inflict pain speech, and then everything started unraveling, and everybody was freaking out about the rate hikes, but I think a lot of that was also due to front-running this tax payment, companies raising cash. Now, the good news is, and by the way, on that note, I should mention that today I just looked at this and it was interesting because the decline in the S&P that we have seen so far from the Powell speech in mid to late August until the bottom today, the low point today, the magnitude of that decline was about the same magnitude of the decline in June, which was associated with the June quarterly corporate tax payment. So, and I sent out an email midday to my subscribers. I said, you know what? The decline now is the same we saw during the June, following the June corporate tax payment. So, I mean, that's also another little sign maybe that this decline may have run its course. Now, what I was going to say is that the good news is that's it for these drains, at least until December 15th. December 15th, we're going to have another quarterly corporate tax drain. But the interesting thing about December is that people, us, the economy, is a big net spender. Okay, so like we save in December because you got all the holidays and stuff like that. So these tax drains, they don't have the same negative effect as the ones we see. Well, obviously April's a big one, June's another one, and this one we just had in September. All right, that's something I want to say that and I told you this. I gave October 6th as a date. Why October 6th? Because in the past, it takes about 3 weeks for that tax drain to be replenished through the normal course of government spending. I keep saying it. I give you guys precise dates. I mean, back in June, I said September 15th. So right around September. I still happen to think that a lot of the selling in late August and into, this month was attached to this upcoming tax payment because everybody is really, really negative and scared because of the rate hikes. And here's the irony of I just posted something on Twitter. By the way, if you don't follow me on Twitter, why don't you follow me? It's Twitter/Mike Norman. And I posted something on Twitter. People don't realize this, that, there's so much bemoaning the rate hikes and oh my God, the rate hikes, this, and the Fed is raising interest rates. The irony of the situation is that the rate hikes are actually helping to restore some of the fiscal flows that have been cut through, the cuts to COVID and the pandemic support. So like where the rate hikes are viewed as this, and I talked about it, they're viewed as terminal, as in death, okay? Terminal meaning death. They're actually one of the most positive things that is happening right now, and I can tell you this, that without the rate hikes, all right, and the rate hikes, the interest transfer effect, the income transfer effect is still in its very nascent early stages, and it's still just like a trickle. It's going to take time for that to ramp up because, right now we're only really seeing it in the T-bill discount. We're starting to see it a little bit in interest on Treasury securities, but it's only up now $3 billion year over year. But that was like a $20 billion swing from negative $17 billion to positive $3 billion. T-bills, we got a $40 billion net positive flow in the discount on T-bills. But all this is just getting going. It's starting to ramp up. But I find it really kind of funny because nobody understands this. And the whole narrative and everything is about the rate hikes. And oh my God, the rate hikes and the rate hikes this and the interest rate. And my God, the rate hikes. Oh my God, it's death. It's horrible. The rate hike. The rate hikes are actually a helpful thing right now. It's adding to income transfers, which, we're not really seeing too much of anymore. I mean, last year and the year before, the government was sending checks to people. And okay, I get it. It's not, the income transfers are not to the same people. But again, it's all going into the swimming pool, man. But that's the irony of the situation. Now, don't expect anyone to understand that. Now, I had a guy here comment that I gotta talk about this. He said, "Why do you spend so much time telling us what's right and what's wrong? If the wrong thing is working, in other words, if it's if they're raising, if the market says the rates are going to go up, then why don't we just follow that?" And I mean, number one, I could just laugh at that comment because it's like, why do you spend so much time on trying to understand what's right and wrong? I mean, think about that statement for a while. Imagine in anything. Imagine in technology. Imagine in, if you're building an aircraft or, a submarine or a spaceship or practicing medicine. Like, I don't care what's right, the right thing to do or the wrong thing to do. This thing is working right now. I'm not interested in knowing what is right or what is wrong. And I mean, first I'll just say, I'm not going to get like sarcastic or anything about it, really. That That's not how I operate, okay? I like to know the truth. I like to know how things work. I like to understand, okay? That's me. You could say I'm stupid, that I just should go with you know, even if it's wrong, if it's working, then Mike, go for it. You're being stubborn. That's not me. Like, one of the things about me, and I know not everybody is like this, and I'm not saying I'm better than anybody else, but I just like to learn. I like to understand. I like to have knowledge, and I like to conduct myself and my behavior based on understanding and on reality and on facts. Now, maybe that means sometimes I'm going to miss out on some opportunities. Maybe sometimes that means I'm going to miss out on, you know, somebody else has a different approach that is not based on what is fact and what is, you know, just conjecture or whatever. That's fine. That's me. Like everyone, you have to pick what works for you. If you don't care about like a deep understanding, if you don't care about that, like if throwing darts at a dartboard, you could say that throwing darts at a dartboard works. So why do I bother with, you know, fiscal flows and all this stuff? Technical analysis. I knew, guys, listen, I don't claim that, you know, my thing is the best thing in the universe, but it's what works for me, and it is aligned to my personality. You know, when I had my Forex course, and you can still buy that course. It's a video course now online on my website, Pitbull Economics. It's a 25-hour video Forex trading course. I say that one of the key traits of success in trading, because trading is really a mind game, okay? It's not about the market. It's not about the methodology. You know, I knew people who were technicians and they did well. I knew floor traders who just traded by the seat of their pants. I was a floor trader. I knew fundamental guys. I mean, there were all different methodologies that work, but there were common traits associated to that individual. They all shared common traits that allowed whatever they were doing to work. You know, there was discipline and blah, blah, blah. I have it all in my course. But one of those traits was alignment. That's what I call it. And alignment means doing or, you know, having an approach that is aligned with your personality. Okay? Because if you don't have an approach that's aligned with your personality, it creates a lot of stress. You feel uncomfortable. And when you feel uncomfortable and when you're under stress, you tend to make bad decisions. You tend to make emotional, reactive decisions as opposed to just being calm and methodical in what you're doing. Okay? So if it works for you, again, I'm not trying to be you know, like sarcastic, and if it works for you, if you don't care about, you know, what the true understanding, what's the right understanding, what's wrong, then it's fine. Then go with that. I don't claim to have a monopoly on, you know, the way to invest or the way to trade. I just say it's aligned with me. I like to have understanding. I feel comfortable when I have understanding, even when things are going against me. That's what it gives me, having understanding. Like if I just went with, oh, you know, everybody's doing it right now because that's what they believe and you can make money doing it. I get it, you can make money, and maybe I'm leaving money on the table, but if I did it, I'm telling you this right now, and believe me, I've been through this a million times. I've been doing this for over 40 years, so I made every mistake in the book. Every mistake in the book. I was a floor trader. I was an upstairs trader. Trading my own account. I made every mistake in the book. But if I went along with what the crowd is doing, because, hey, you can make money that way, right? If everybody's going one way. And the slightest little tick against me I would panic and get out because it's not aligned. You know, I would think like, why did you do this? This is not how you think. So, you know, alignment is really, really important. And again, for me, having the right understanding, even if that means I'm going to leave money on the table or miss out on opportunities, I'd rather conduct myself that way. Okay, so I thought it was important to say that. I try to bring you on this channel information. I don't say, hey, you got to do it my way. No, you don't have to do it my way. There's a lot of people here who, you know, they disagree with what I say. And that, you know, fine. You know, but I spend a lot of time trying to understand. And in the course of that, you know, endeavor to try to understand, it becomes clear to me, you know, this is, my approach is like a technological approach. It's like scientific, I like to call it. But in the course of, you know, really delving into this and having an understanding, it makes me see how the crowd really doesn't understand. And again, you could say, well, what does that matter, Mike? The crowd's making money right now. And I say, that's fine. I'm going to miss out on some opportunities, but I have to operate in a way that is aligned with my personality. Sorry. So that's it, folks. We had 116 billion drain. Oh, by the way, I want to mention one more thing, because yesterday I said there were 3 ways that deposits can disappear from the banking system, and none of those involve rate changes. That was just wrong, okay? There is a 4th way, which I forgot to mention, and that is very simply when loans are paid off. When people pay off their loans, that deposit goes away, and, you know, it disappears off the books, off the bank's books, and off the borrower's books. Okay, like the money in your checking account is gone, you spent it, but then you paid it off, and then the bank's asset is gone, so that disappears. But, you know, I would not include that because 2 reasons. Number one, and these reasons are related. Number one is that we naturally see credit growth over time, okay? So deposits are created when banks create loans. And the reason we see credit rise over time, like it's a growth trend, is because our monetary system, the government cedes the responsibility of, you know, money creation, if you want to call it that. It's really credit creation. You know, 2/3 of it, and it used to be more, but, you know, we've had a lot of government spending over the years, but more than 2/3 of it is bank credit. But if the government were to just hand out checks to people, okay, you would see like what happened during the pandemic when they were sending out those checks. It was really, really incredible. Bank credit loans just contracted like crazy. And that's because a lot of that was used to pay down debt. So I wouldn't really consider that as one of the reasons for the decline in bank deposits. Stick with the 3 that I gave you, and remember, it has nothing to do with interest rate changes. Nothing, like the Wall Street Journal said. Anyway, that's it. Let's see what happens. Again, today to me was not a bad day. I mean, would have liked to seen a positive close, but the thing that was interesting to me is that the magnitude of the decline from the Powell speech in late August until the bottom today, the low today, was pretty much the same magnitude as the June sell-off that was the result of that corporate tax payment. So we'll see what happens. All right, everybody. Have a good weekend. Bye.